Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video we will continue our discussion about allowable deductions, particularly research and development. If you're ready, let's start. So what is a research and development cost? A research and development costs are costs for improvements of process and formulas as well as the development of improved or new products. It is necessary that the business or any taxpayer would do anything to improve its business, to improve its product, or to improve its service. He might want to go on extra mile to improve this process and products by investing some of its money or fund to research. So this research and development cost could also be deducted from our gross income. And there are two types of research and development costs. Research and development cost may either be number one, for acquisition or improvements of property subject to depreciation or depletion used in research and development. So this is the first cost the taxpayer would likely to incur or to spend on. So the taxpayer might want to construct a facility or an establishment or a lab for research purposes. Okay, so these properties or facilities used for research are subject to depreciation. So although they are part of the research and development of the product or process, but since these property or facilities are subject to depreciation, they could not be claimed as research and development cost in this instance. They are research and development cost, but they could not be deducted as research and development cost. Although they are costs incurred for research and development, but they are subject to depreciation. Hence, the rules on depreciation applies. Okay? I hope you get that. Again, when the research and development cost is spent on properties or facilities which are used in research, they are considered as research and development, but they could not be deducted as research and development. They could be deducted as depreciation. They will be capitalized as a property or asset subject to depreciation. So the rules of depreciation applies, not the research. And we also have the second one, the other research and development costs. So this includes the salary of the researchers or any feasibility studies or any other cost for research and development. This other research and development cost do not include the cost of the facilities or buildings or laboratories used for research and development. So our focus in this video is all about this other research and development cost, because for improvements of properties or for any properties used in research, we have already discussed about depreciation. Okay, and depreciation applies here. But for other research and development costs, this is our very focus in this video. Okay? So as a rule, a taxpayer may treat research or development expenditures which are paid or incurred by him during a taxable year in connection with his trade, business, or profession as ordinary and necessary expenses which are not chargeable to capital account. Because again, when the research and development cost is a property or chargeable to capital account, therefore that could be subject to the rules of depreciation. Okay? The expenditures so treated shall be allowed as deduction during the taxable year when paid or incurred. So it is always necessary that these expenses are ordinary for the taxpayer's business or practice of profession, and these expenditures are related to the taxpayer's trade and paid or incurred in the taxable year before it could be deducted from the taxpayer's gross income. So The amortization of certain research and development expenditures. This does not include those research and development costs spent to properties which are subject to depreciation. At the election of the taxpayer, the following research and development expenditures may be treated as deferred expenses. Number 1, paid or incurred by the taxpayer in connection with his trade, business, or profession, and those which are not treated as expense, or those which are chargeable to capital account but not chargeable to property of a character which is subject to depreciation or depletion. So those other research and development costs which are not properties, which are not facilities subject to depreciation, they would be amortized. In amortizing, in computing taxable income, such deferred expenses shall be allowed as deduction ratably distributed over a period of not less than 60 months, as may be elected by taxpayer, beginning with the month in which a taxpayer first realizes benefits from such expenditures. Okay? So here are the summary of rules. For the acquisition of property or improvement for research purposes, and we also have other research and development costs. So as I have said earlier, if this research and development cost pertains to properties or facilities or improvement and are chargeable to a property, this will be capitalized and subject to depreciation. Okay, so the rules on depreciation or depletion applies when the research and development is related to a property. However, other research and development costs, this pertains to the salary of the researcher or feasibility studies or consultants. So the treatment would be at the option of the taxpayer. It could claim as outright expense full expenditure in the year of incurrence or payment. That's the first option. Or option 2, it could be amortized over 60 months, or that is 5 years from the date the benefits are realized. So let's have an illustration. A manufacturer of food seasoning is continuously conducting research and development on its product lines. So in 2018, it extended its research and development building at a cost of 1 million pesos, which is estimated to be used for 20 years. Again, this is an extension of a property used for research, and we know this 1 million will be subject to the rules of depreciation. And aside from that, it incurred an aggregate amount of 1.8 million for other research and development costs that will benefit the company. Okay, so this 1.8 million could be amortized or could be deducted in full, depending on the option of the taxpayer. So how are these costs treated for income tax purposes? So our solution would be the 1 million pesos shall be capitalized and be depreciated since such costs were incurred for building expansion. This will be considered as building improvement. This will be treated as an asset subject to depreciation. While the 1,800,000 at the option of the taxpayer may be deducted in full in the year 2018 or amortized over 60 months, beginning the date where the taxpayer benefits from such research and development expenditures. And it was said that in this problem, the 1.8 million immediately benefit the taxpayer. So the building will be depreciated as follows using the straight line method. So we have depreciation is equal to the cost minus salvage value over the useful life. So we have depreciation, our salvage value is 0 and the useful life is 20 years. Therefore, our depreciation is 50,000 pesos per year. While for the other research and development cost, assuming the taxpayer opted to amortize the other research and development cost, the amortization will be computed as follows. So we have here, amortization is equal to research and development cost over 60 months or 5 years. So we have 1.8 million divided by 5 years. So for the year 2018, the research and development cost to be deducted from the gross income is 360,000 pesos. this per year. However, always remember this. The taxpayer can only begin to amortize, assuming he chooses the option 2 to amortize the research and development cost. He can only amortize these costs when there is already a realized benefit. So if there is no benefit yet, then he could still not deduct the research and development cost as a deduction from the gross income. You might be asking, what if the taxpayer would not realize any benefit from this research, meaning this research is a failure? In that case, the taxpayer will deduct the entire other research and development cost as a deduction from his gross income in full amount. Okay? That's it. That's how you treat research and development cost. So I hope you learned a lot from this video, and if you're new to this channel, please subscribe and click the bell so you will be notified whenever I will upload new videos. Okay, thank you so much for watching. Bye bye. So, finally, we have limitations on deduction. The rules on research and development shall not apply to any expenditure for the acquisition or improvement, any expenditure for the acquisition,